Welcome to your Austin Real Estate Daily. Today is July 16th, 2010. And
got it right.
Yeah, Jason and I are here to spread the knowledge and wealth
of Central Texas real estate.
That's right.
For you, the viewer.
As you can see, we're still practicing.
Well, it's Friday. John, on Friday we like to keep things light, send you to the weekend with some good news. And the good news that I have is what I saw on CNN Money yesterday.
That's right.
That ad of the top 25 areas in the nation, mind you, that have had the best job growth over the last 10 years. Texas had
It was us.
5 of the top 7.
Yes.
And 2 of the top 3.
Yeah, 2 of the top 3 were actually here in the Austin metro area. One of them was Williamson County, and one was Hayes County.
So hopefully that translates into, I always say look past, and hopefully that'll tell you a little bit about the future. So we've had a lot of good news over the past 10 years in jobs creation, that sort of thing. Hopefully that translates into more jobs in the future.
Remember, jobs, jobs, jobs. That's what drives
you. You ain't got no job, you don't have much. No house, no car.
So what else is going on? Well, I tell you what, the financial reform bill was just passed by the Senate. It's going to the president's desk for signature. In fact, by the time you see this video, it's probably already going to be signed into law. What does it mean for us?
What does that mean for us?
What does it mean for you? Well, nobody really knows yet. In fact, even the lawmakers don't really know exactly what the bill means. I do know that it does create a new government agency out there. That's what we need, more government. I guess you're trying to create jobs. Creates another government agency, a consumer protection agency within the Federal Reserve. The problem is, though, is that they're going to have to create the agency, they're going to have to staff it, they're going to have to finance it, and then that agency is going to take the bill, and then it will interpret what that bill means to you, to me, and to you guys when it comes to banking, when it comes to mortgages, when it comes to credit cards and those types of things. So the point is that they've passed the bill, the president's about to sign it. They were just going to create this regulatory agency. We're going to sit back and see how they interpret it.
John, I thought Friday was good news. We don't know if that's good news or bad news yet, but
it's news.
It is news, so that's important. I have the email of the week, which is information that we can pass along to you. I thought this one was really important with the market the way it is, all the short sales. We got an email from...
What's that email say?
It says, from Tina Broderick and Leander, my borrower is currently working with his lender to do a short sale on his house. What are the benefits of the short sale versus a foreclosure, as I hear these both show on your credit exactly the same?
Well, what does that mean for a short sale or a foreclosure? There is a big difference there. In fact, Fannie Mae, Freddie Mac, and FHA, VA, and USDA look at them differently. Short sale, as we all know, is when a buyer, before he gets foreclosed on, or actually an owner, before he gets foreclosed on, he'll go to his current bank or servicer and say, listen, I have to get out of this house, I'm upside down, and they'll do a short sale, which means they're going to sell it short of what's actually owed on the property.
Right.
This way, there's no foreclosure filed against the borrower, it doesn't go on their credit, it just shows that they were probably late 1 or 2 times, and maybe says settled for less than full value, but it doesn't say foreclosure on there. Having a short sale precludes you from getting a mortgage for 2 years. You can't get a mortgage for 2 years. Now,
4 years if you do get
4 years, it's a foreclosure, and so you don't want that foreclosure stigma to be on there because it's a lot worse. It could be 4 to 5 years before you can actually purchase another home. However, there is certain circumstances that, here's the big deal, even if you don't get foreclosed upon, if a notice of default is ever filed with the court systems,
right,
that is considered a foreclosure to Fannie Mae, Freddie Mac, FHA, VA, and USDA. So even though you don't get formally foreclosed upon, if the notice of default has been filed, they're going to consider that a foreclosure even if they never went through the full foreclosing procedure. So be careful if you're doing a short sale or if you're educating people about short sales.
Right.
Just because
it says short sale doesn't necessarily mean that they don't have a foreclosure on their credit.
That's exactly right. Got to watch out for that notice of default. Typically, notices of default are filed when the borrower is 60 to 90 days past due on their mortgage. Sometimes shorter, sometimes longer. Contact your specific lender about it. All right, guys, this is your weekly credit tip. Credit scores are so important now, Jason. The better your credit score, the better your financing terms are going to be for credit cards, for mortgage loans, car payments. And what does that mean for you? That means better cash flow on a monthly basis for you. If you have a lower interest rate on your home, your payment's going to be less.
Save you thousands and thousands over the life of the
Your
month.
car payment's going to be less. Your credit card payments are going to be less. So it actually saves you money to have a higher credit score. everybody asks me about credit, and we see multiple credit reports on a daily basis. I see probably 10 or 15 different credit reports every single day. And one of my tips for people out there, and I have a lot of borrowers that come to us and say, well, I pay my credit cards off every single month, so I should look perfect. But when you pull their credit, it shows the full balance on there. And that's because a credit score is really just a snapshot in time. It's like a picture. So whenever that picture is taken of your credit score, you want to make sure it has that
best picture.
Yeah, you want a glamour shot taken of your credit score, of your credit profile when it does that credit score. So my advice to you, for those people out there who pay your credit cards off on a monthly basis, call them up, call Capital One, whoever it may be, and ask them, hey, when do you guys report to the bureaus? Find out when that date or that window is that they actually report to the bureaus, and then time your payments before that. That's right. That way, so when your credit score, that snapshot is taken, it's going to be taken in the best light. That can improve your credit scores 50, 60 points. And on a mortgage, the difference between a 679 credit score and a 680 credit score could be a half a point in interest rate.
For sure.
Guys, this has been your Austin Real Estate Daily. Remember, real estate happens on a
Daily basis.
See you next time.